When you invest your money in the stock market, what you want to look for is where the money is moving to, not where the money is moving out of. That's how you find real opportunity, because you wanted to go where the economy is going, not where the economy was. And this is where what you want to look for is what are shifts that are happening in our economy or in markets that could potentially create an investment opportunity. And there's a few that I want to go over today, particularly talking about data centers and what's changing there, going over what's happening with water, and number 3, what's going on with NIM, net interest margins, and how these can create potential investment opportunities. But I got to remind you, I'm not telling you what to invest in. I'm just showing you some things that are happening to spark that investment part of your brain. That way you start looking for investment opportunities in the economy around you. And I am not telling you what to do because, well, I'm just a random guy on YouTube. I'm not a financial advisor. Investing has risks. You are never guaranteed to make money when you invest. In fact, you will lose money at some point. So make sure you always do your own due diligence and never blindly trust a random guy on YouTube. So let me break this down. So starting with data centers, we know that more and more people are using their phones. They're using technology to save things on the cloud. My phone today has a terabyte of storage on it, but I still use my iCloud backup. So I have stuff that's being saved on the cloud. If you have anything that's saved on the cloud, what that means is it's actually stored somewhere physical, and that physical place is a data center. Not to mention, we've seen a big growth in artificial intelligence, AI, and with the growth in AI also comes more storage for that AI, which is being stored in data centers. Now, this is where you have some investors that will say, oh, because more people are saving things in data centers, I'm gonna go invest in data centers. And sure, that could be one potential investment opportunity for you, but you can also dig a little bit deeper because there's more to it than that. For example, those data centers need a lot of energy to operate 24 hours a day. That could also create a potential investment opportunity. Not to mention that there are specific companies that specialize in data center energy. But that's not all. These data centers need to be kept at a certain temperature because they have all this hardware, all this technology that's operating, that's creating heat. And so they need specific technology to cool the data centers, to cool the technology down. And there are specific data center cooling technologies, specific data center cooling companies that are involved in cooling the technology down, because if that data center gets too hot, ChatGPT could die. So let's think through this analysis like an investor. If more and more stuff is going to be stored on the cloud and there's going to be more AI usage, that could create more demand for things like data centers, which could also mean that there's more energy needed for those data centers and more cooling technologies. These could create potential investment opportunities, assuming that that trend continues. But you have to also understand that there are specific companies within this niche that could do good, that could also do bad. For example, there could be data center companies that are very bad with their cash and they could go bankrupt. There could be cooling companies that have a bad technology and get sued and they go bankrupt. And so this is where you have to understand the risks, not to mention the fact that if we see a recession start tomorrow, that could completely change the economy. So you want to understand where the opportunities are, where the money's moving, but also understand the risks. That way you can analyze what's happening and then make a decision based off of what's right for you. Another example of this to help you think like an investor would be water. So my Market Briefs Pro team went out and they interviewed BlackRock. And what BlackRock said when it came to water is that there is a finite supply of water in the world, but a growing demand for water because everybody needs water. So then we did some more digging. What did we find? That you have a lot of big institutions like BlackRock, who is the largest money manager in the world, that are going out and buying/investing in companies that are related to water. That includes water infrastructure companies. That also includes water treatment companies, because they understand that there's a limited demand here, because they're looking at the water industry for the next 10, 20, 100 years saying, what's going to happen to the water industry as there's more people, as there's more need for water, while the supply of water doesn't change. And so that's one of the reasons why they're investing in that. Could that create a potential investment opportunity for you? Maybe. Again, it depends on your goals, depends on your risk, depends on what you want to invest in, but now you're starting to think like an investor. By the way, if you want to stay up to date on what's happening in the financial markets, my team at Briefs Media publishes a free newsletter called Market Briefs, where we go over what's happening in things like the economy, the stock market, the housing market, the crypto market, and the global economy into a fun and witty and easy to read newsletter. We have hundreds of thousands of investors that read Market Briefs every single morning, and you can read it in less than 5 minutes every day. So if you want to stay up to date on what's happening, I got the link for you to join Market Briefs down in the description below. And then the third example that I want to show you to help you think like an investor has to do with NIM, net interest margins. And the reason why I want to talk about this one specifically is because I made a video talking about this last year in 2024, and now we're starting to see the impacts of this today. Here's what happened and what's going on. In 2024, the Federal Reserve Bank cut interest rates multiple times, but in 2024, we also saw mortgage rates go up. What does that mean? Well, if I diagram it out for you, here's what's going on. You go to the bank to borrow money. For my male followers, I drew a mustache, which in my native language Punjabi we call a much. My female followers, I drew a braid, which in my native language Punjabi we call a gut. You go to the bank and you want to borrow money. This is called your mortgage rate. This is the rate that you're paying. This is the retail rate that the bank is charging you. But the bank is borrowing money at a different rate. The bank is borrowing money at what's called the federal funds rate. So they can borrow money from other banks at the federal funds rate. This is what the Federal Reserve Bank is setting. So in 2024, the Federal Reserve Bank lowered the federal funds rate multiple times. But over the year in 2024, your mortgage rate went up, which means this margin on the cost the banks are paying to buy that money and the rate at which banks are selling you that money at your mortgage rate went up. So this net interest margin went up, which helped some banks make more money in 2024. Take a look. In early January 2025, JP Morgan Chase Bank said that they made more profit than ever before in 2024. Not just that, they also broke a record for how much money a bank has ever made in America in 1 year in the history of time. Maybe this net interest margin had something to do with that. Plus, many other banks also saw huge profits in 2024, which might have something to do partially because of this. So the first underrated opportunity is to be more involved with the research and to look for where money is moving. Yes, this comes with more risk, but it also comes with more potential return. And what this means is you want to understand where the money is moving to, because that could potentially create an opportunity. But there's a couple of things that I want you to remember. Number one, there's risk. There's risk that maybe the money won't move into the industry that you thought. And then you also have the risk that maybe the company that you're investing in is not doing a good job. And then you have the last layer of risk is, well, we could see a recession, or we could see a broad market thing happen, which hurts the broad economy, which could also hurt your stock. That's why I say that this is one of those higher risk, higher potential reward opportunities. It's not guaranteed return, it's higher potential return. And there's one last thing I want to remind you before we move on to opportunity number 2. When I try to identify a good investment opportunity, I'm looking for 3 different things. Number 1, it has to be a legal investment. Number 2, it has to make financial sense, meaning I have the opportunity to make money. It's not guaranteed, but the opportunity. But number 3, it also has to make moral sense for me. I'm not going to be the judge of your moral compass, but it's something you want to think about. Because just because something is a good investment for somebody else may or may not be a good investment for you. I'm not going to tell you what you need to believe or what you shouldn't believe, but it's something you want to factor into your own investment plan, because it's up to you to decide your moral compass. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.